Hi, welcome back. Thank you for joining us again. My name is Abby Flynn. I'm a broker associate with Ketchum Realty Group in Tallahassee, Florida. And joining me today is Rhonda Koenders with University Lending Group. And I wanted to bring her here today because building permits are going out the roof. We have no inventory, so a lot of buyers are just getting fed up and they feel like they can get a better deal by building their dream home, their perfect home, and not having to compromise on whatever else they want to compromise on. So, Rhonda, tell me about yourself.
Well, I have been in the business a very long time. I actually got my real estate license in 1992 in Arizona. So I was an agent for years, and then I got my broker's license, and I was a broker for years. We moved to Florida, absolutely love Tallahassee. It's a great place to raise a family. And I went into banking and really missed real estate. So I went into the mortgage side of banking and was a mortgage processor who prepares the file for an underwriter.
Right.
And then I went into loan originating. And so I kind of had the entire
So you've seen
focus on it.
the whole spectrum of what it takes to buy a house, build a house, buy a house. Okay, Rhonda, with so many people looking to build their own home, what's the process? How do they start? Where do they begin?
Well, as you know, Abby, the market is extremely thin right now on homes.
Right.
So a lot of people are building because they feel they can get more bang for their buck.
Right.
And they can get what they want.
Right.
So at University Lending Group, we have different construction products, so a conventional and a VA. And so really what they need to do, they can find a lot, and we can take the price of the lot and we can add it to the price of the build and do it all in one loan. Now we do a one-time close construction perm at University Lending Group, so that saves the client money because they're not going to have two closings.
Right.
So
One appraisal then as well?
There's an appraisal in the beginning, and then there's either, depending on the type, if it's a VA or conventional, there's another appraisal at the end or an inspection at the
Inspection, okay.
end. So if someone owns their land, then we can utilize that equity in the lot, and sometimes clients aren't even out hardly any money because we can use that equity.
Right.
So building is just, it's going to be the future of the area with the lack of inventory. People are building in Wakulla, they're building in Jefferson County, Gadsden County, all over the place. So it really opens up a lot of opportunity for you.
Right, absolutely. All right, so we've talked a lot about the process. What we haven't talked about are things like closing costs, down payment. What do we got?
Well, for a conventional loan at University Lending Group, we can go up to 95%, what we call loan to value. So that would be if you're buying a property, lot, and building a home, it would be 5% down. We could go up to that depending on the client qualifying. With VA, it's 100. Closing costs, actually our closing costs are really good. But the closing costs would be paid at that construction close, and of course they kind of vary depending on the price of the build and the lot and everything. Mm-hmm. But we do go up to 95%, which is huge because a lot of lenders don't do that as well. And with the VA, like I said, being 100%, and so basically they have closing costs. Okay. So the closing costs, and some of the builders paying some of the closing costs, so that's beneficial for them.
Right. So generally, in closing costs on a conventional purchase of a home, it's somewhere around 5%, depending. I think it's higher for lower prices and less for higher prices. So if they budgeted 5%, are they in the ballpark for closing costs, or should it be a little higher, a little lower?
I would probably go a little bit higher. The beautiful thing though is I always recommend people get pre-qualified because then you're not guessing at these numbers.
Absolutely.
And so if they come to me in the very beginning and I can kind of coach them through the whole process, I feel that people, if they know they're pre-qualified, so it doesn't cost them anything. There's no obligation. But then they know their numbers.
Right.
And I can tell them how much they qualify for. It doesn't mean that they have to go that high.
Right.
But they know approximately what their payment might be and how much they're going to need at closing.
Excellent.
They know different things because you can also ask the builder to pay a percentage of the closing costs.
Right.
So we can discuss all those things. So instead of just, thinking about a percentage of it, they have firm numbers.
Absolutely.
So that's huge. And then if they own the land, whether they bought it and they paid for it free and clear, and or if it was deeded to them, I can use the equity in the land. So they may
As part of their down payment.
Exactly.
So they may not be bringing very much to closing.
Exactly.
Okay.
Yeah,
Excellent.
because I could use that equity just like if they're doing a refinance. So
Excellent.
that's I do a lot of those.
Okay, so one more question about the land and the financing. If the buyer has bought it, let's say they bought it several years ago, they still have a small loan on it, they got a lot loan on it, and now that land is worth, let's say they bought it for $65,000 6 years ago, and now it's worth $150,000, and they own 15, they can take that equity between the 15 and what it's worth and put that toward their bill?
Correct. So basically, how that would work is we would pay off the balance of the lot in the loan.
Okay.
Okay, so that would be paid off in full. So that would be part of the loan.
Part of their closing.
Correct. So typically, what will happen like that is, when I figure it, I'll put in what they owe on the lot, what they bought it for, they feel it's worth, and then the build costs.
Mhm.
So then you just add what they paid for it or feel it's worth plus the build cost, and that's my estimated value.
Okay.
But what's going to happen is once they have the contract plans and specifications, we're going to send those plans and specifications and contract to an appraiser, and he or she is going to go out to the property and appraise that home being built on that lot. And then we're going to use that value. So that appraisal could even come in higher, but whatever equity is in the property, yes, it can go towards that percentage for the loan to value, and it can help pay for the costs.
Excellent, that was great news. That was really, I can see a lot of reasons why people are flooding to build right now.
Absolutely.
There's a lot of reasons. Interest rates are low, they're probably gonna go back up. So let's talk for a minute about the lot itself. So when buyers have purchased lots, sometimes they haven't done all the due diligence they need to do. And I've learned this from helping people on my side. When they build, they should be doing things like perk tests. They should be doing things like clay tests. They should be doing soil sampling so that they know that the land that they're going to build on is going to support the house they want to put on top of it. Unfortunately, we have places with clay, which operates differently, and then places with lots of sand. So if you don't take care of those things, you can end up with a house that has all kinds of really bad unevenness.
And have unexpected costs that,
You're
no
absolutely
one
right.
likes unexpected costs, so that's very important.
That's probably one of the biggest things I've seen as far as unexpected costs. With people who have the land, they have the equity, but all of a sudden now they have to bring in a bunch of dirt, and that adds 10% to the cost of the house. That's heartbreaking.
Absolutely, and that's whether they own the property outright or they're buying it.
Right.
It's really important if they're looking for land to buy to work with an experienced agent,
Right.
because that agent will represent them and guide them through the process along with me. But then the agent will also help them and recommend, does this property have a homeowners association?
Right.
Homeowners associations sometimes have architectural review committees.
Yes.
You want to see those restrictions.
Right.
Sometimes there's minimum square footage. Sometimes the homeowner association will charge you $1,000 or something
Just
just
to
to
review.
review the plans.
Right.
And then they can say you need to make changes or blah, blah, blah.
Right.
Will there be a septic tank? If there will, do a perk test. But an
Right.
agent, an experienced agent like yourself will walk them through that process.
All those tests they should
Because
get.
you don't want to buy a lot and then go
Right.
to build and either find out you can't build on it for whatever reason.
Or you can't build the house you want on
You
it.
can't build
because
it.
it's not wide.
Or it's going to be, you're going to be on a whole lot more money because
Right.
now you're having to do all these things you weren't planning on. So
Right.
the lot is very important, and that's working with an experienced agent is critical.
Right, absolutely. Thank you for that. When it comes
You're
to
welcome.
building, let's say they have a family lot, so we see this a lot, and especially in the McCullough and the Jefferson area. Families who've been here a long time have lots of land, and they give their child, their grandchild, their cousin, whatever, a piece of that land and said you can build there. What's the process? They have to have that land deeded over to them, in their name, the same name that's going on the loan, in order for that to work. Is that correct?
That's correct for the once we hit application process. So typically, if someone is, and it does happen a lot, it's very popular. So let's say mom and dad is gifting So they're just doing a quick claim deed over there to their son for 2 acres, wherever. Then I can start the pre-qualification process. So the client knows the numbers and everything and feels comfortable with that. But I can't start the formal application. So once he gets a build contract and ready to go, we can't do that without it being in their name. So it's important for them to get it deeded into their name at that point. But I also guide them through the process from the beginning all the way to the end.
Right. So the deed process, how long does that normally take if it's a quick claim deed and everybody's in agreement?
Oh, not long at all. Typically, someone can go to title company, real estate attorney, and just have it drawn up, have it signed and recorded. So not long at all. I mean, you can do it really quick.
Right. And it's not very expensive either.
No, it's not. No, it's
The
not.
whole process is probably less than $2,000.
I would say so. Yeah.
Yeah. It really depends on the attorney and how much time and how difficult it is. If
Correct.
there's been a title warranty, then it's a little easier, but we can get into that in another video.
Okay.
So they have the property all picked out, they have the builder picked out, what happens next?
Well, if they have the builder picked out and they have, let's say that they're buying a lot,
Okay.
then they want to write a contract on the lot and make sure, I always recommend people call me because you have to have, as soon as you sign the contract, as you know, that clock is ticking.
Right.
So if you have a 30-day close on it, it's got to close. So you want to make it long enough where we can do the construction loan and do them in one.
Right.
And so I always recommend to people, after I pre-qualify them, if they're searching for a lot, to call me when they find that property. And that way I can kind of coach them on how long we'll need. It'll also depend on what process. I mean, it's good to have a builder picked out, because if you have a builder picked out, you kind of know what you want. And then you're looking for a property, you get the lot, get the build contract, and we can just run with it because you're already pre-qualified.
Gotcha.
So far as the lot, if you already have the lot, you want to find a builder. I do recommend talking to a few builders. Building a home is a very personal thing. So you want to make sure that you have a really good relationship with your builder. And so you want to pick a builder. At University Living Group, all of our builders have to be approved. If they're not already on our approved list, it usually just takes me a day to 2 to get them on. There's an application for it. There's a background check, and we have to have their license and insurance. We do that to protect our clients as well as us.
Right.
So they want to make sure that they have that builder, start the plans process. You will either draw your own plans, which right now is taking a really long time because everyone's really busy, or some builders will have plans you can just pick from,
Right.
and you can just make minor adjustments. So
Right.
all that has to do with finding that right builder.
Absolutely, that's absolutely true. So when it comes to tract homes or homes that are already like being built in a neighborhood, those are a lot easier to close on?
Absolutely, and I'm really glad you asked that, because there's a huge difference. Someone will call me and they'll say they need a construction loan, but they're buying a home, a spec home. A spec home is a property that the builder has spent their money building.
Right.
And then when it's,
In speculation that someone will buy it.
exactly.
And they usually put all their bells and whistles, and they use it kind of as a showcase to help other people buy it.
Absolutely.
Yes.
So depending on when the buyer comes in, the buyer might be able to pick out things, or the home may be done. It might just be a home,
Right.
but it's not a new construction loan.
Right.
So I get that a lot. People will call me and they'll say, I need a new construction loan. And when I talk to them, I find out it's really a spec property, and they need what we call an end loan. It's just like if they're going to go buy any other property, and then I can look at what loan's best for them, conventional, FHA, VA, USDA, because you can do any of those type of loans on that property.
Right.
But it's completely different because it's the builders using their money to build the home. On construction loans, the borrower is using their money through the loan process to build their home.
Correct. What does that mean for the buyer builder? For the one who's taking on the loan, they've hired the contractor, they're not able to move into their house. Let's say it's Leon County and it might be 18 months down here. A lot of the other counties are a lot shorter. What does that mean for the buyer? What is that buyer paying during that build process?
That's a great question. Building an actual construction loan is completely different from a regular loan.
Right.
So what happens is let's say that you have a lot contract, and 60-day close or something, you've talked to me and we've talked about that, and you have your build contract. Once I have the plans, specifications, the build contract, and the lot contract, I formally can start the process. Hopefully they've already been pre-qualified and I have their information, so I'm ready to run. If anyone wants a pre-qualification letter, I can do that because we've already started that process. So at that point, the application is formally started. It takes 45 to 60 days, usually just depending on the type of product and what's going on. We are, like I said, a one-time close lender. And let's say we close in 45 days, that's what I call the construction close. At that point, the borrower will pay majority of the costs and fees at that point. What we do not collect for is homeowner's insurance and the escrows, because at that point there's no house.
Right.
So I always recommend that they set aside some money for when their house is done, they'll have those funds to put those things in place. At the construction close in about 45 days, if you're buying that lot, like in this example, we'll pay off the seller of the lot completely. So that money's out on your loan. And then typically the builder will want an upfront draw.
Right.
Upfront draw is 10% of the bill cost.
Okay.
So let's say, excuse me, let's say your lot is $50,000 and you're building a $300,000 house.
Okay.
At that construction close, we pay off the seller, so you have $50,000 out on your lot. And if it's a $300,000 build, the builder would get $30,000. So at that point, you would have $80,000 out on your loan. Construction loans, when we close, we just don't give the builder the money and say, go build Susie's house. They get it in segments, or what we call draws.
Yes.
So at that point, you would have $80,000 out on your loan in this example. You would be billed interest-only payments on that money each month to keep it affordable. And so you would pay interest-only payments throughout the build process every month. What happens is once the builder gets to the next phase where they need more money, then they'll request another draw.
Right.
And then usually there's inspections that have to be passed, and there might be documentation, but once they do that, we give them more money. So more money's out on the loan, so that goes to the balance, and then the next interest-only payment would be higher because it's based off the new one.
Next draw. Right.
So this happens throughout the process of the build.
Okay.
Once the home is complete, we modify it. Modification is just the process of going from interest-only payments to permanent fixed. Most people do 30-year financing. And at that point, like at University Lending Group, we lock up front at the construction close, but then we check rates, and if rates are lower, they can float down at the modification close.
Right.
So at that point,
But will they float up as well?
no, because they're locked in up front at the construction close.
Excellent. Okay, that's good to know. So, just to back up here for a minute, for people who have not gone through this process, about how much money is that interest only loan?
Well, I mean, it's just whatever's out on it. You just take that 80,000 times 4.5% divided by 12. Approximately, that's about what it is.
A couple
So
hundred dollars.
it's not bad at all.
Excellent.
So that's why it's so affordable to build,
Right.
because you're making those interest-only payments during it.
Right, and then at the end, when the final, how many draws are there on this loan?
Typically, there's 5 to 6 draws.
Okay.
Typically.
And each draw is usually corresponding with some, like, getting it framed and a permitting.
Exactly.
Yeah,
There's
okay.
a draw schedule. Correct.
Okay, gotcha. Okay, at the end, let's say we've finished building, everybody's happy, we've done the final walkthrough, then what happens?
Well, at the end, what we do for as a living process, when it gets to about 90%, and then we'll start the modification process.
Okay.
And so credit docs expire on all mortgages.
Right.
So credit docs are usually good for 4 months. So you're not building a house in 4 months. So typically they'll request the credit docs. Credit docs are things like pay stubs, bank statements, W-2s, those credit report, those things.
Right.
And so they just make sure that the files, financially, the person's still, in the same set of circumstances.
So it's still really important that the buyer builder does not go out and borrow
Correct.
more money or buy new furniture, buy a new car, anything that impacts their credit in a significant way.
Correct. And I always coach people with that. You can buy whatever you want after it's
After
modified and it's closed, but you don't want to do that beforehand. Definitely. So once all those documents are gathered, they'll check rates. Well, if the rates are lower, there's a possibility to float down, and then you'll pay your year's homeowner's insurance. You'll pay for your escrows, so you have that money for taxes and insurance in your escrow account, and we'll modify your loan. And then your permanent financing will be set, and you'll start making a regular payment. And then, of course, at that point, usually, like I said, there's a reappraisal, or if it's a VA, there's an inspection. And there's a certificate of occupancy the builder will do and everything, and they can move into that.
That's the final permitting.
Mhm.
That's the house.